If you're a struggling day trader that has been searching for a consistent strategy, this video is for you. In this video, I'm going to be going over my strategy, a part of my strategy that has provided consistent results for over a decade. So let's get into it. I hope you guys all had a wonderful day. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to bring you high-level professional day trading education, all here for free on YouTube and on X. So let's rock and roll. I hope you guys all had a wonderful day. Give me 1 sec. I am going to fire up these fucking charts. Let's do this. Okay, give me 1 quick sec here, guys. Just got to get things lined up. Okay, let's rock and roll. So for those of you that just might be joining us, I just want to give you a little bit of context as to what you are looking at these screens. These black charts are 1-minute charts. The blue charts are the daily chart. If you don't have your chart set up like this, you're really going to miss things out, especially having that daily chart on your trading screens that you are able to see. And these blue levels are simple technical levels, support and resistance levels that I strike 30 minutes to the market open. And then I develop my trade plan surrounding these levels. Okay, it's very simple. So it always starts with preparation. If you're someone that is using scanners or you react to news or catalyst, you got to cut that shit out because you will absolutely crash and burn over time. There is no way to be consistent with those types of results because you are dealing with catalyst and volatility instead of just pure technicals. So with that said, today, the trade plans, I'm going to show you what the trade plans were. So up top, this is a level to go short. At lows, this is a level to go long. And then on this level, above long, below short, depending on how we opened up. So if we open below, we are going to go short into that level. Now let's take a look at Qs. Now on Qs, its mid-level was not mid. It was way up here. That was the previous close. So instead of that, all I wanted on Qs was low and high. Okay, so up here is a short, down here is a long. As you can tell, this triggered very easily for the long, and we triggered both short and long on SPY. And then later on, we had longs here, and then a short up top. Now, did I take all of those trades? Absolutely not. I'm not a fucking retard. So what do? Well, for myself, as I explained in one of my last videos about odds and probabilities, I want to trade the first 30 minutes to 1 hour maximum of the market open. You have the least amount of variables and the highest amount of odds for success. So if you don't know what I'm talking about, or you don't understand why that would have the highest odds and probabilities and the odds for a successful trade, go check out yesterday's or the previous day's trade recap in the live section. So on this here, I'm actually going to go into the one chart because I specifically traded SPY today. So SPY was our main watch yet again. And yet again, it was a beautiful first trade. So very simple trade. Right in this area, I'm going to draw it out for you. Market opens up and it takes a little bit of a dip. So this was still about 70 cents away from the level. It's too far away, especially on a trade like this. So I'm going to wait for the first touch of either this level or this level. That's all I'm waiting for. That's the trigger. As soon as it comes up and touches that, I'm in. So market opens up, dips down, does not touch the other level. As it shoots up, I am going to execute. I've executed that level. It came within a reasonable and tolerable amount of risk. It tested even higher, was able to add more size in because I am protected up against this level. This 681.53 level is the previous close. And that is a valid technical level. So as it comes racing up into that level, I execute and I pay myself on the pullback back down into support, which was the support from pre-market. Very simple trade. So now it gives multiple tests. When it comes up again, I am going to add into that position. Added into the position, my add is right there. And then as it pulls back, I pay myself. And then as it pulls back more, I pay myself more. So this trade here, it doesn't look like much because of the range, but that is over 1 point of premium. That is a monstrous trade, guys. It's huge percentage-wise. And it's that simple. On those two trades, and I want to point this out, and it's not a lot of range. On this little bit of range here, guys, I locked in $5,218. My maximum profit potential on the day was over $6,000. Now, I stopped out, giving it time to do what it wanted to do upon the retest. Once it breaks through, then I finally stop out, and that was that. So now let's talk about what I promised you. I'm going to talk about a strategy that I use day in and day out. And I use a variation of this. This is one of my core strategies. So all I'm laying out here for these levels, I have 3 levels, right? There's nothing fancy about it. There's nothing new or interesting or wild or complicated. This is high of day, low of day, previous close. And then it is a matter of first directional pick and first touch of the level. So let's say the market opened right here, because that's where it opened, and it dipped down into this level. Guess what? I would have went long. But it didn't. It opened and it pushed here to the first level, and I went short. And I know that that sounds really silly when you say it out loud, like it doesn't mean anything. But I want you to think a little bit deeper than just the first layer of what I'm telling you, okay? That tells you right there is no bias in these trades. You are a day trader. I see a lot of traders out there talk about their bias. Oh, my bias, I had a long bias for today, or I had a short bias for today. Why? You're missing it. If you have a bias in any way, shape, or form, number one, you don't know what the fuck you're doing. Number two, throw that shit out the window. As a day trader, you are looking for short-term opportunities based off of, the 1 to 5 minute chart. That's all you're looking for. You're looking for short-term opportunities. Then why do you care if it is a red day or a green day on the daily chart? It's irrelevant to what you are doing as a day trader. Day traders don't care whether the market's going up, the market's selling off, we're in a full-blown crash, full-blown squeeze, or we're consolidating. In fact, we were consolidating in this range here all week and some of last week. Okay, so this range is a consolidation range. These are my favorite fucking setups on the daily chart. Everybody looks for volatility and breakdowns and breakouts. You're missing the easy money because you're doing what you've been told by all of these monkeys out there, guys like Tim Sykes and all of these fucking charlatans that are out there. They're not, if you actually break, I know I'm about to go on a tangent here. I understand that. But if you actually break down a guy like Tim Sykes and what he makes on average through the 30 years he's been trading, it works out to be like $100,000 a year. That's insane. That's such a small amount. That tells you he doesn't push himself at all. 100,000 to a new and beginning struggling trader sounds wonderful. There's members in the room that make that on the year. So it's like, it's crazy taking advice from someone that has never pushed themselves and is coming up with strategies like short the first red day, buy the breakout, short the breakdown. That is nonsense. If you are, and because he's mainly catering to day traders, okay? And again, to get back to the point, a day trader doesn't care what the market's doing. In fact, when it's consolidating like this, it is so easy. It's like shooting fish in a barrel. And now I'll explain why. I don't want to just come to you with the question. I want to come to you with the answer as well. So let's go back to what I was saying about high of day, low of day, previous close. Oopsie daisy. Previous close. When you have these levels on a doji day, you see how this is a doji? It's not a perfect doji. It's actually a small body candle. But regardless, you have tested highs. You've tested basically lows the previous day. It's in that consolidation range. When we open up, it'll have no choice but to test one of these three levels. And I know that might sound a little goofy and super obvious, but for a lot of people, it's not obvious. It has to test one of those levels, and it will test one of those levels, and you will receive a reaction at one of those levels. Now, was it a monstrous trade points per share wise? No, not at all. But you don't need that when you are trading the way that I teach how to trade. You don't, it's not necessary. I talked about it today. You really want to get in and out of these trades unseen. The least amount of time in the market that you have money in the market, the least amount of time that you are exposed to risk. And that's what it's all about. As traders, the only thing that we can do, and I know I've said this to death, is control our risk, manage our risk. That's it. That's all we can control as traders. Everything else is out of our control. So if you know that the more time that you are in the market exposes you to more risk, then you are not doing your job as a trader. So to come back now again to consolidation ranges, and it has no choice but to test this level, or test this level. When we open up and we have high of day, low of day, previous close marked, that basically breaks us into two main channels, the upper channel and the lower channel. So what happens if we would have opened up on that upper channel? Let's say it only sold off a little bit pre-market and it came and it opened up right here. Well, the odds would dictate, because we are lower than 50%, if this here is 50% in between this, right? We're lower. Magnets come into effect. You would be wise to get calls or your long ready to go long into 681.53, or be buying the 681 or 682 calls. Why? Because it's the closest. It's the closest into that support. Therefore, at the open, we are going to dip. Same thing if we opened up here. You see how it's above that 50%? What's it going to do? Where are the odds telling us this is going to strike first? Well, at the open, it'll pop. It'll magnet into that upper level. You will execute that short. Now, with all of that said, it doesn't necessarily matter, because even if we opened here and instead of a dip, it didn't do that, it popped, it's going to come into here. It will magnet into that level, or it will get close enough within a reasonable and tolerable amount of risk that you will simply start executing and averaging in. A lot of people complicate trading, guys. This really is simple. And I'm going to tell you what it breaks down to. It breaks down to daily chart setup. So where we are on the daily chart, are we at highs or are we at lows? Or are we consolidating somewhere in between? Okay, daily chart. So that's number one. Number two, are we gapping up or gapping down? Okay, that's going to come into effect. Number three, where we actually open up in relation to these levels. And number four, how much distance do we have away from those levels? All of these four factors are super important to any trade. Any one of these four things, okay, can determine your size, how you would size that trade, okay? Because there's certain things, let's say we're up at highs right now on this. If I went long, let's say we opened up here and it came down into this level. Yeah, it's a valid long, but would I be using 100% maximum size in a position like that? No, because we did not gap up over that. We're still in this. We're still in this consolidation range, right? And we're up at highs on the daily chart. So it's not about having a bias. We would just size more on the short. If we opened here, that would be call for a pressure trade, what I call a pressure trade, okay? So this is a little bit different of a lesson than just the basic core strategy. This is about sizing. If we open up nice and close into the short and we're up at highs, I have protection here. I have a lot of protection. Take a look. We have high of day, high of day, high of day. We have 3 levels of major resistance there. I talked about it the other day. Are you going to be able to punch through 3 steel reinforced brick walls? Because that's what that is. You wouldn't be able to do that, would you, on first punch? Now, it might be able to, if you could punch it 1,000 times, yeah, sure, you'd probably break through it. Now, instead of 1,000, might punch through if it tests and tests and tests and tests, and then it'll break out. But it will not break out on that first test. If it would, and I'm going to talk a little bit now about psychology before we wrap this up, and I'll tell you why it won't break through that. In order for it to have true strength, it would have to gap up. Why is that? Well, it did not have the strength in order to gap up, did it? That's why it gapped down below high of day. It didn't have the strength in order to gap up over that pre-market. It's already telling you a story. It's already telling you it didn't have the strength to break that level of resistance. Can it break that level of resistance? Yes, but it will now, because we are below that, take multiple tests before it breaks above that. So if we take a look here on this, right? So you see this level, this 683.86. Do you see how many times it's tested this area? So we have multiple tests. We have all of this, and it comes within, a striking distance of that and completely fails all the way back down. And then it comes in here. Do you see how it ranges like that for, what is that? About 45 minutes. Same thing. Do you see what happens upon the first breakthrough? It actually fails it. It tests it again. It pulls back, comes up, tests, finally breaks through. And then because of the amount of distance upon push through, now it can remount this and continue up. And then, of course, it's getting close to the end of the day and it's very easy to break down. But that's a whole other lesson. But do you see how many tests there are before it breaks through? It has to do that. Those are the rules. That is part of natural movement theory, my price action method. So I know I covered a lot in this video, and I understand that. And what I would recommend, even if some of the stuff that I went over may sound very simple, I highly recommend that you go over it and watch this again and again, because there's a lot of information in this that can actually help you as a trader. This is a combination of methods and strategies and experiences of over 10 years of doing this. And I've always kept it simple like this. My strategy for the last 8 years that I've been showing it on YouTube and social media has always remained the same. It is exactly the same. Nothing has ever changed. And that right there should tell you something. I've been doing the same thing for the past decade, almost a decade on social media, where I've actually put it onto social media. This works, guys. So if you want to learn how to actually do this, remember, this is just a free YouTube video, okay? I'm not going to give you away all the secret sauce. I'm not doing that. I ain't giving that shit away for free. But if you want to come learn, I will absolutely show you, and I will help you get there. Come to tricktrades.com. And if not, continue watching free YouTube channels and videos, and you're going to chase your tail for another year, 2 years, 5 years, however long you've been already chasing your fucking tail. At what point do you stop hitting and beating your head against the wall and come get help? But that's up to you. Life is always full of decisions. Make good decisions, and life becomes very easy. Okay, guys, I hope you all have a wonderful day and a wonderful evening, and we'll see you tomorrow. Adios, folks.